Great. Thanks, David, for this introduction. Wonderful. Good afternoon, ladies and gentlemen, and welcome from my side. My name is Markus. I'm from Germany, and I'm really feeling pleasured and honored that David invited me to be a part of this awesome and incredible show here from TimingResearch. And yeah, let me say thank you first that I can do this and that I can share my knowledge and insights about trading with you guys around the world, wherever you are. So actually, it's a little bit especially this morning, because I guess in your time frame it's afternoon 3. Here, actually, as I said, I'm normally based in Germany. It's in Munich, in Bavaria, but actually I'm in Bangkok, in Thailand, and here it's 3 a.m. in the morning. So it's awesome. I'm in the 26th floor here in my hotel, and I have an awesome view at the skyline, the black night skyline with the moon shining into my window here in Bangkok. And it's really awesome. I'm feeling great to share now my ideas about trading with you. So my topic I've chosen for you is how to trade with logic, a safe way to your own trading success. So what I want to teach you today is at how you can step on the path of logic in trading. But before we start with this, we have to make the lawyers happy with the risk note. So, you're responsible for your own trading success. I don't give you any advice. I just share kind of knowledge with you and just the insights about trading. So please be aware that you're responsible for your own trading. So just have a look on this for just a couple of seconds so we can make the lawyers happy. So thanks for doing this. So this is just me. This is, yeah, that's not really important. Just I'm in trading engaged for now 23 years now. And my slogan is the journey is the reward, or the way is the goal, however you will call it. And I trade with the so-called and really old-fashioned Dow theory. And it's really easy, but my way is the way of logic. So I'm not important, so you are the important guys. And what I want to teach you today is a special way, a really, really special way. So actually, you're looking here at the chart. So why are we talking about logic in trading, ladies and gentlemen? Why we have to talk about logic in trading? So first of all, I guess you know that most of traders fail in trading and suffered about the losses in trading. So actually around the world, in Germany, in Europe, in USA, around the world, around about more than 80, or I would say 90% of all traders fail in trading, and they don't have winners on the long run. Sometimes, yes, you have a winner, but this kind of feeling when you're sitting in front of your charts and you're looking at the right side of the chart and you have this big, incredible question mark in front of your eyes because you don't know what happens next. So, and this is what makes us crazy every day. And people tell us, yeah, you can do this, you can do this, you have to go long, you have to go short. But if you are sitting alone in front of, in your home office, and you're sitting in front of your screens and you're struggling with this question mark on the right side of the chart because you cannot have a look into the future in trading. So, and therefore we have this, if we take this awesome show from David and Anka this week with this incredible webinars, especially we saw this, and we have four more webinars this today. Then you see we have incredible and absolutely awesome, so many input and insights and knowledge. So I would say about, yeah, what you can know about trading, everything is almost limitless today. We are living in the 21st century and everything is there. So if you want to have something, if you want to know something about trading, then you can Google it in trading or Instagram or YouTube, and then you get a mass of information about trading. So literally everything is there, what you want to know about trading. This is the one side. On the other side, we have 80 or literally 90% of traders, they don't make money with trading. So, and there is a big gap. So everything is there about knowledge and information about trading, but most of traders cannot make money on the long run. So where is the gap? So what's the problem with this stuff? This is that we have a lack of understanding what's really going on in trading. And this is why I want to take your hands in this webinar right now for the next minutes. And let's take us a step on the path of logic, thinking logic and not in an emotional way, just thinking in logic. So my question now is, you have this chart in front of your screen right now, and maybe I would, as your mentor, I would please you to say, okay, would you go long or short in this chart? So on the right side of the chart, you see, okay, maybe you make your own analysis right now, and you see, oh, maybe they're higher high or lower low, so whatever, and you make a kind of analysis of, yeah, of course I go long or short. Here we go. That's the first problem. The way we talk. And maybe you say, oh, come on, that's a word playing what we are doing here. Yeah, it is. But this is the way how our subconsciousness is working. So you work with your body senses, like your eyes, what you see, and what you hear with your ears. So if I say long or short, so what does it mean? Literally nothing. Your subconsciousness is not working with those words long and short. What will you want to do with long and short? So we have to think and we have to talk in different words because we're working with our subconsciousness. So let me show you the next slide. And then I place you to make a new analysis like this one. So what do you think? On the right side of the chart. So make a quick analysis for you. So maybe you can type in the chat box. So if you want, whatever there is, I can see the chat here too. So if you have anything in your mind, you can type it here in. So someone is talking, thanks for joining this, the chat. Thanks, I can see it here. Great stuff. Up and long and flat and long. Okay, that's great. So you see, you have your own, yeah, let's call it perception. Oh, Chris says that's a triangle. Okay, so that's your perception of the chart, because one person actually I can see in the chart says that's flat, so avoid to make a trade there. So a couple of guys says, yeah, that's long, and Chris said that's a triangle. So you see, that's the point. That's really the point. That's your perception. So let's take a third one. So just take a third one. So here, what you would do here in this chart, that's the third one. So what you would do here on the right side of the chart. So what you buy or what you sell, would you go long, or would you go short? Type in the chat box. What would you do there with this chart here on the right side of the chart? Would you say, okay, I go long, or I stay out, sell or wait, yeah, or whatever? Sell, Chris says, I would sell here in the position. And now this is really interesting. Thanks for joining and thanks for being a part. So what's really interesting is maybe you recognize it and you realize it. Look, I show you this chart and this chart. So the first and the third one is exactly the same chart. In this chart, you don't have any kind of information. It's just the slip of the chart. And this chart, not this chart is exactly the same. Exactly the same. It's the same slip. It's just another kind of expression how I showed you this chart. Here you have kind of more information. It's after X and 4-hourly chart, and you have a clearer view at the candles maybe. But again, look this chart and look this chart. It's exactly the same. So maybe in the first chart you make an analysis completely different to this chart. And now you see where's the problem. It's your perception. It's just what you see in the chart. And then we talk about, oh, I go long or I go short. So your subconscious net is not working with those words. So what should you do with long or short? This is not what we are doing in trading. In trading, we sell or we buy. And this is completely different. And yes, in trading, we only can work with two body senses. That's eyes and that's ears. And that's the big problem in trading, because now we used to act like in our normal trade, in our normal life too. We are acting about what we see and what we can hear. In our normal life, you have more body senses, like you can touch something, you can feel, you can taste, you can smell, like this. But in trading, you can only work with two body senses. And by the way, guys, I'm a German guy, so my English, I know, is colored a little bit by German. So if I use not the same grammar, like the perfect grammar or something like that, then please forgive me. I do my best that you understand what I try to explain. So, but you see, it's different. It's your perception. And this is why so many people fail in trading, because we used to say, I'm thinking, so I must being. Again, I'm thinking, so I must being. And as a consequence, it's normal that we think, okay, what I can see, there must be a special meaning. Of course, yeah, there is a meaning for you. But to be honest, I'm sorry that I have to take off your illusions right now. No one cares about your perception. No one cares. Yeah. So what's the problem basically? The problem is that you think as a private trader, there must be a meaning what I see in the chart. And that's the big problem, because look at this one. You are not alone. So as you can see, I showed 3 charts and we had different meanings. Someone says, okay, I go long. The other one says, I go short. And another one said, no, this is a triangle. I avoid to make a trade. I stay on the sideline. Same chart, guys, same chart and different meanings. Welcome to trading. And now just have a look of this. This is, we trade in Forex, for example, in FX, we trade every day around $6.6 trillion, or in German we say euros. So we have up to 2016, just only private traders, just private traders. We don't talk about the professional bodies. We talk about private traders, 9.6 million people around the world. And we have a market growth of almost 30% since 2016. So I would guess we have today, actually in 2021, we have around about 15 million private traders, plus the professional traders, hedge funds, banks, central banks, and so much more. And now here we go, ladies and gentlemen, you look at the chart and you really think it's true what you see there. Unfortunately, no, it's not. It's just your perception. So take this picture in your mind. Maybe you lay down a little bit in your seat, wherever you are right now, in your office, in your home, or wherever, and just start to think in a logic way. So of course, maybe you check, or you have the chart in front of you, maybe of S&P 500, and then you check it. And at the same time, exactly the same time, literally thousands or maybe millions, millions of traders around the world. And in Germany, I know a lot of people, they trade S&P 500 too. And maybe you are placed in New York or in Chicago or wherever. And we are looking at the same chart. Do you know me? Do I know you? No, you don't know me. And I can never know what you are looking at the chart. You see, but we have different perceptions. We would never see exactly the same. But based on your own perception, you make a decision. And then you buy and sell. And that's the big problem in trading. Why we fail, because we think it's true what we see here in trading, but unfortunately it's not. So look at this one. That's a slip of the New York Stock Exchange. And as you can see, for example, while you are looking at the chart with blue and red candles or black and blue candle, whatever you look there, or maybe you look at bars or whatever there is, look at those guys. That's stock exchange. The guys don't look at any charts. They have just numbers on their screens. And do you really think they are interested in your triangle, what you see in the chart? Or do you really think they are interested what you are looking at your chart? Maybe there is a long and there's a short, but those guys are trading the same market like you, exactly the same market. And really, think about it. We draw a trend line into our charts, or maybe a kind of support or resist or something like that. And at the same time, those professional guys are trading in the same chart and the same market like you. So this is what you have to think about it, and why we have to step on the path of logic. No one cares what you see in the chart. No one cares. So to be honest, I care. I care for you. Do you know why? It's my mission. It's my life mission. It's my POE. You know what is POE? It's purpose of existence. Because I lost everything with trading. I lost my money. I lost my self-confidence. Actually, years ago, I lost my complete family because my former wife said, Markus, you're such an idiot with your damn it trading. I take the kids and I go, and I will never come back. And it happened, guys. And I don't want that you make this experience. And maybe you make this experience a bit when you're sitting in front of your screens, you come back, you come home from your normal job, and your wife and your kiddies are waiting for your dad or the mom. And then you say, oh, I have to trade right now. I don't have time for you right now. I have to trade right now. And then you lose money. This is not the way you can make money. And then you get in fight and argue with your wife and your family. This is not what you have to do in trading, guys. We want to make money. We want to be happy, because happiness is the only thing what counts in this one life we have, because we only have one life to live. And it's not okay that you spend too much money with this trading stuff without making money. So therefore, we have to change something, and we have to step on the path of logic to trade in a proper way, that you can make sure that you make money in the long run, that you can take the money and make good things for this, that you can make your wife happy, that you can make your kids happy and not unhappy because the dad has no time. This is not what we have to do. So therefore, I want to lead you to the path of logic today in this minutes I have to trade with you. And just have a look on this. Just have a look on this. And as you can see on the ceiling, it was the half of the full traders floor. It was UBS in 2016 or 2016, yes. And guys, listen to me. They are trading the same market like you. And we as private traders, we really think, you cannot think about it. You really think that it makes sense that you see any triangle in your chart? That you see any support or resist in your chart? that you draw any trend line on option or whatever there is? Really? Think about it. All those traders are trading the same market like you. And this is what I want to give you as a kind of food for your thoughts. And that's not your enemies. That's the same team, because there are no enemies in trading. And this is a kind of rumor when people say, oh, there are the big sharks in market and they are beating and eating the small fishes, and the bigger one beats the smaller traders. Guys, that's not true. It's not true. That's a team. And all of those traders are trading the same market. And there's just only one order book. So if you have the S&P 500 future, or maybe Dow Jones future, or NASDAQ future, or gold future, guys, there's just only one future. There's just only one S&P 500 future. So if you trade the future, you trade with those guys. So do you have any experience in trading a lot of? Do you have a grade? Do you visit the high school? Do you have the university? Do you have a bachelor or something like that? Did you ever work for a company? Did you ever work for a bank or a hedge fund? Did you know what they are doing there? That's your team. That's the players. Because you know, at the end, we have a meeting. With every trade, we have a meeting in the order book. And in the order book, there are just 3 columns. We have buyers, we have sellers, and in the middle, there's the price. And everybody who is trading any product in trading is just trading the price, no more and no less. And this is what really happens. Just we have a meeting in the order book, guys, and you have to see this exactly in that way. So why we fail in trading is based on our own perception, because we used to think in pictures. So if I say your name, if you hear a special name, for example, S&P 500, and you hear my words, S&P 500, then a kind of picture grows in your mind, in your subconsciousness, and automatically you have a picture in your mind. And this picture leads to an opinion. And then you think this opinion has a special meaning in your normal life. That's true. That's true. If I say Joe Biden, there's a picture in your mind. Yeah, and then you have an opinion about that. Or if I say COVID-19, yeah, you have a picture in your mind, you have an opinion about that. And that's completely normal, it's fine. But in trading, it's the worst. Because having opinion is not the way of logic. Because you cannot make we cannot make money with your, opinion. You can make money with the price you trade. And that's the point. You don't trade the product, because in the order book, there is no product. There's just only the price. And you have 2 sides. You have buyers and sellers. Because if you think about a product, automatically you have a picture in your mind. And automatically you have a kind of opinion. But if you think about the price, just only the price, and guys, we only trade the price, there is no question in your subconsciousness. There's just only maybe one question. And this question is called, what's about the price? What is it? Is it cheap, or is it expensive, or is it normal price? And if you think about the price, there is a special business principle. Because if you don't take the product with you at home, because you want to make, you want to cook with that, or you want to make a cake with that, it's just that what you're doing in your normal life. You go to a grocery, you're interested in a special product, you want to trade, you make a purchase there. in the grocery. So there's a delivery, there's a product, you have to pay the price to take the product with you at home. So yeah, there's a relationship to this product. Yeah, of course, because you like maybe a cake or something like that. This is what we are doing in normal life, but in trading, we don't. We just trade the product. You don't want to buy it in that sense that you take it home and put it in the shelf. You can watch it every day. Oh, this is my lovely S&P 500. Oh, I love my euro. No, it's not. You trade. And if you trade, yes, just only one question, how I can make money with the price. And there is the big business principle. And the business principle is called, let's make money with buying cheap and selling expensive. Maybe you say, oh, that's too easy, but that it is. But that's what we have to do as private traders also. And you don't have a guarantee on the right side of the chart. So this is what happens in the market. And this is the picture I want to give you into your mind, a kind of food for your thoughts. So the order book on the left picture, the left upper picture, is like the water hole in the desert of Africa. And all animals are coming to this water to take one job, to make one. They are just here to drink water. The big ones, the small ones, and the really, really big ones. There is no fight at such a water hole. If you look at the documentation, for example, Netflix or something like that, and you look in this, it's really interesting. At such a water hole, which is the only, which maybe the one and only at this desert, it's really interesting. The animals never attack each other because they know that's living. The water is living, and all animals come to this to drink water. And you see the different sizes of the animals. And guys, in trading, it is exactly the same. There is a product and there is a special place. And every animal has to come to this place to take water. And in trading, we can say every trader who trades S&P 500 future or gold future, whatever, has to come to this one and only order book and to get into this only order book. So there is no fight, guys. There's just selling and buying. And it doesn't matter what kind of trader you are. If you trade for a central bank, if you trade for a hedge fund or something like that, who cares? Interestingly, in the order book, there is no special row or special column you can type in your name. There is no special color, your special column where you can type in the reason why you want to go long or short, why you want to go sell or buy. There is no one cares about that. There is no name. No one knows you. And you don't know if you want to buy something, who is the other part on the other side of the order book. So, but everybody has to go into this order book. And this is why I want to teach you just a bit to think in prices with logic. So, and if you, I love this picture on the right side, you know, this mouse, yes, at this elephant here, this is what we have to do. So if you're such a kind of mouse, what we are as private traders, I guess it makes no sense in standing in front of the water hole and you see the elephant is coming and you say, hey, I'm here, guys, let's come on, I'm already here. I guess you will not survive this, not in the long run. But this is what most of the private traders are doing. They're crossing in front of the big ship. They're standing at the water hole. They see the elephants are coming and they say, yeah, I'm here, guys. I am the first one here at the water hole. If you want to take water, you have to come over me. Yeah, it happens, especially, but you will not survive this one. So I guess it's the better one to step on the sideline just a little bit and say, okay, I see the elephants are coming, take your water. And if you're done, I go with you. And this is what we have to do as private traders. And therefore, we have to think in a different way. That's not your enemies, ladies and gentlemen. It's not your enemies. That's the team you work with. So my mentor taught me this lovely sentence: the share you buy today with confidence is being sold to you by someone who is as sure of himself as you are. And this is why we say, welcome to trading. Guys, there is no fight. There's just only your perception, what you see. And I want to give you a special word today in this webinar. And maybe you should take a pen and a paper and make this note for you. It's a logic, it's deep, deep logic. And the term is called dependent origination. Let me repeat. There's a special term in logic. It's dependent origination. And by the way, the word logic has its origin in the Greek word logos. And logos means reason, acting in a reasonable way. Reason, that's logic. Would you really say you're acting in a reasonable way on the right side of the chart? I would not say that, because years and years I make really crazy things on the right side of the chart, and that was not reasonable. That was not with reason, of course not. That was really stupid things I did in the market, and that's why I lost everything in trading. But the moment you have an understanding, a deep understanding of dependent origination, then you try to, you make your first step on the path of logic. So what does it mean if I say there is a dependent origination? So for example, David and Anchor make this wonderful, great event. But without David and Anchor, we would not be a part of this. So we are depending of David and Anchor, for example. And now let's transfer it to your trade. So maybe you see a kind of trend. So a trend is depending of trend arms, and the trend arm is depending of a move and then a correction. And this move and correction are depending on what? Yeah, of actions of traders, and they have a meeting in the order book. So without the order book, there will be never a trend. But just it's your perception, because in the order book, there is no trend to see. In the order book, there are just numbers, the price and the volume on the left and the right side between buyers and sellers. So, and normally, and that's the big problem in trading, we use to ask the right questions, but at the wrong time. If you have a look at the chart, like I showed you when we started with this webinar, you saw, okay, on the right side of the chart, you make an analysis for yourself, your perception, and you say, okay, there's a trend, it's going up and down. So we try to judge, or we try to analyze the right side of the chart to have a bit view at the future, because we want to make money. So we try and we ask ourselves, okay, is the market in a correction or is it in a move? This is what normally happens when we are kind of staring at the chart, and try to explain what happens on the right side of the chart. Oh, damn it, I don't know what happens next. But that's the right question, but the wrong time. What we have to do is to think in a different way, because we trade the price. And if you think about the price, then it's the better part. The first question must be, what's about the price? Is it expensive or is it cheap, the price? And if you think about the price, ladies and gentlemen, then there is only one principle you can make money: buying cheap and selling expensive. Or in modern trading, we can say selling expensive and buying back cheap when you go, you speculate in falling markets, by the way. This is what we have to do in our trade. So, and let me show you if I can make this, there's exactly this one. So you see, and if you think about the price, yeah, then you have to ask ourselves, is it expensive, the price, what I see here on the right side of the chart, or what is it? And not, is the market in the correction or in the move? This comes afterwards, because if you don't have a kind of orientation, what's about the price you trade, how you will make a decision based on logic, how you can make money and in which direction you want to trade. And if it makes sense to buy, if you don't know if is the current price already expensive. But this is what most of the traders are doing, buying in at the wrong stage and selling when the price is already cheap. And they don't understand why the price is going more short or not going cheaper. So first of all, we have to ask this, where is my normal price? Yeah, where is the normal price? So is it cheap? Is it expensive? Or what's about my price on the right side of the chart? Because there is the big question mark, ladies and gentlemen. So, and then if you know, okay, that's the normal price actually, which is based on volume, by the way, because you know, how does the price develop? No, it's not about your triangle, what you can see there. The price is not developed by any support or resist. No, ladies and gentlemen, the price is just only developed by volume. Exactly, just only volume. And this is the most important thing what you have to know, ladies and gentlemen. And then you can think about how I can make money. Does it make sense to go long or to go short? So, and now I want to teach you how I trade in trading and why this kind of logic is so much important. So let me just see this one. Okay. So, and maybe you think, oh yeah, I know Charles Dow, but let me teach you a little bit deeper sense. And let me teach you a little bit deeper logic, what Charles Dow really meant when he created his own tenets of his Dow. And we say theory, but in my view, it's not a theory, it's a proven approach. And I want to give you kind of pictures in your mind that you understand what Charles Dow really figured out. And let's make a time travel back to the year 1879. And there were different times, ladies and gentlemen. There was no computer. There was no computer. We had just telephones at that time. And we have kind of telegraphs. So they have no information like us today. We open Google, we open YouTube. That was not available at this time, 1879. But that was the kickstart of our modern trading at this time. It happens for 150 years right now. So they didn't find it. They just, Charles Dow and Edward Jones just figured that out, what happened at this time. And I give you this picture in your mind. So like this, guys, that was the time when our modern trading was started. That was the time. And the only information source the traders at this time had was this big black board at the wall with this young guy. And this young guy had a white calc in his hand and wrote the numbers at the blackboard with white calc. And ladies and gentlemen, that was the only source of information for all traders. They're sitting in their seats in these chairs and watching. You can see this. Take this picture in your mind. This is what happens today also. Just the blackboard is replaced to our modern order book. But it's exactly the same, and computer today makes this order book. And those guys, they're standing literally on ladders at the wall, at the blackboard, and we're listening to the headphones or to the people that were crying and shouting the numbers to those guys. And then they take the white calc and write numbers at this blackboard. And that was the only source of information. There was no daily paper, there was no internet, there was no computer, nothing like that. Just those white numbers at the blackboard. That was everything. That was the beginning of modern trading. And guys, it's proven. You can see it, you can read it in online, that those guys they were never moving and look into the crowd and we're asking, who are you? Why? Just a moment. Wait. Why you want to buy? Is there a special reason? No, guys. Those young guys never moved and asked someone why you want to buy or you want to sell. Never. They were never asking about the name. They're just listening about the numbers, people shouting to the guys, I want to buy this volume, I want to sell this volume, and then they calculated a new price. And then they wrote it at the blackboard, at the wall. That was the beginning, guys. And this is today exactly the same. Just we don't have the blackboard, we don't have these guys anymore, but we have the same. There is an order book, and in the order book, you only find numbers, volume, and price. And based on this, yeah, I would kind of say of observing what Charles Dow and Edward Jones did, they created the first tenet. Everything what supply and demand influences you can see in the chart, or I would say at the blackboard. And as a private trader, you don't need fundamental analysis. Oh my gosh, this is a kind of revolutionary picture. This is a kind of revolution. If you say you don't need fundamental analysis, oh my, I'm quite sure a lot of traders would say, Markus, you're crazy. You need fun. Of course, if you want to invest in a product on a long run, yes, of course, then it makes sense to make a fundamental analysis, but not as a trader. Why? You don't find in the order book. There is no column you can type in, oh, my order is more important than yours because I made a fundamental analysis. Okay, my order is more important. No, guys, this is not. As a private traders, you must not care about fundamental analysis, because imagine this, picture it in your mind. Especially you make a big fundamental analysis. You have a great understanding of the rates and GDP and something like that. And you can explain everything what happens in the market as a private trader, by the way, just a private trader with a smaller account. And you make a big fundamental analysis. What you have to do at the end, if you make a decision, you want to buy or you want to sell, where you have to go? Exactly into the order book. And there is not a column where you can type in your name or your reason why you want to go long or short. No one cares about that. Please keep this in your mind. So tenet number 2, Charles Dow, Edward Jones figured exactly this out, that there is a major trend, a medium trend, and a small trend. And they are defined by higher highs and higher lows and in the opposite direction. How did they figure it out? It was interesting. Imagine again, guys. Imagine again. That was the beginning. And it was the only source of information. So what was the first time frame? So type in the chat box. What do you think? What was the first time frame ever? So what do you think? Type in the chat box. What was the first time frame ever? What do you think? I knew it, Chris, that you are right. So what's the first time frame ever? Exactly. I'm happy, guys, that you're still with me, with the German guy. Exactly. There was a daily chart because there were no computer who split it into lower time frames. And by the way, guys, in the order book, there is no time frame. And in my brand new trading course, which will be released in 1 or 2 weeks, there's a waiting list. You can type in your name if you want. I will show you at the end of the webinar. I explain exactly this topic, why time frames are an illusion, why time frames are an illusion, because in the order book, there is no time frame. So where does a time frame come from? Think about it. Exactly. It comes from you. There is no ultimate character about that. And this is really, really interesting. So the first time frame was indeed a daily chart, because there was the beginning of the day, of the trading day, and the end. And at the end of the day, there was just only 4 prices: opening, close, high, and low. And based on that, Edward Jones figured out, okay, we can make a candle with this. But then he figured out, okay, what should I do with one candle? And then he saw, okay, after a row of a couple of days, oh, there was an up candle and a down candle and an up candle and a down candle. Then he saw, oh my gosh, this is a trend. They didn't find it. They just observed that. They just watched it with their eyes, and they had the seeds that rippled up in their mind and say, oh my gosh, you see, it's a kind of trend. And about the trends, they figured out we have different phases in those trends. There's a phase of accumulation, there's a phase of progression, and there's a phase of acceleration. So, and in the phase of accumulation, we have to trade, guys. The market rebounds after a correction, and experienced traders decide to buy or sell. Why just only experienced traders? Because they know the business principle. If you trade the price, you only can make money if you buy cheap and sell expensive. And they have the volume to change the price. They have the, think about it, guys. The price just only developed by volume, not a trend line, not something new, so like this, just only volume, because in the order book, you only can see what? 2 numbers, volume and price. And it's exactly like the same in our normal life. If something is available a lot of, then you have a cheap price. But if there is a product, nothing is there anymore in the stores, yeah, it's more expensive, or you cannot buy it. For example, you cannot buy it if nothing is there, for example. So therefore, the accumulation phase is the only phase where it makes sense to buy, or if you speculate in falling prices, to sell. So what's about the other 2 phases, progression and acceleration? Yes, we need them, of course. And that's human behavior, ladies and gentlemen. It's human behavior, because a human trader is looking in the first place about security. Because as a private trade on the right side of the chart, you always feel this uncertainty, because you cannot predict the future, even the next seconds. You don't know what happens next. And therefore, I created in my new course, I created this sentence. Please make a note in your diary if you want. If you cannot work with guarantees, you have to work with probabilities. Again, if you cannot work with guarantees, you have to work with probabilities. And probabilities means you have to work with a strategy. If you don't have a guarantee, you need a strategy. Again, if you don't have a guarantee, you need a strategy. Again, this is really important, ladies and gentlemen. If you don't have a guarantee, you need a strategy. What does it mean, not having a guarantee? You cannot influence the price. Your volume is not big enough. Your account is not big enough to influence the price. if you can influence the price with your volume or with your kind of influence, then you know what happens next. You know where is the price in 5 minutes because you do it. You influence it with your volume. But if you don't have this option, you have to trade with a strategy. And a strategy is based on probabilities. And probabilities means there is never, ever 100% guarantee. There's never a hit quote of 100%. You have less than 100%, which means, okay, it's just a kind of coincidence. And this is why we have to buy in the accumulation phase. And this is the picture, buying in the accumulation phase, ladies and gentlemen. And this is a kind of strategy. This is a kind of strategy. There is no 100%, my dears. There's no 100%. So if you have this accumulation phase, or this, by the way, the big picture is not responsible for the success of a trend continuation, then you have a cheap price in this stage, and then with the so-called progression phase and the accumulation phase, the price is going up and up and up and reach the last high. In Dow theory, we say this is point number 2, and this has a probability, this has a probability of between 64 and 71%, depending of the maturity of the trend, but never 100%. So the job of a private trader is to find this accumulation phase, to go into the market here and maybe to go out there to make money here, or maybe to trade the trend then. But to make the decision, if you want to trade the move or the trend, for that you have to know what's about my price. So how we can figure out now this accumulation phase if we are not those guys who create this accumulation phase, and if we are not those guys who finish this accumulation phase. Therefore, we need rules. And this is really, really awesome, ladies and gentlemen. We need rules. Let me explain. I have just 5 minutes to go. Oh my gosh, time is going by so fast. Sorry for that, but I guess I will be on time. Why do we need rules as private traders? This is based on dependent origination. Again, dependent origination. If you have no guarantees, you have to work with strategies. And the strategy is based on probabilities, very deep and logic sense, guys. And if you work with probabilities, you have a kind of mathematic calculation. And a mathematic calculation, dependent origination, by the way, a mathematic calculation, ladies and gentlemen, dear traders, is based on fixed conditions. Let me give you just a quick example. If you see a rainbow in the sky, the rainbow is dependent of 2 conditions, that it's raining and shining the sun at the same time. And if you want to make a picture, there are 3 conditions more, which means you have to be there, you have to be a camera with you, and you have to push the button to make a picture. You have 5 conditions if you want to make a picture from a rainbow. So if you will find the accumulation phase, you need to have fixed conditions. And those are 4 rules, the magic 4 rules. I call it my lovely 4 magic 4 rules, because they lead to guaranteed success. So rule number 1, you need a valid trend. So what is a valid trend, by the way? A valid trend is 1 move, 1 correction, and another move which goes higher than the last high. This is a valid trend. If you don't see this on the right side of the chart, there is no valid trend, then there is no trade. Because there is, I created this sentence, NT, no trend, no trade. No trend, no trade, NTNT. And if you have this trend, then make sure that you catch the first or the second correction, which is the second trend arm. Because rule number 2 means the latest chance to step into the trend is the fourth trend arm. The best option, the best opportunity with the highest probability is in the second trend arm, extraordinary probability. And then we trade rule number 3, out of the correction or latest entry close to the last point, to the last high, vice versa if you trade falling markets, for example. And then, because why is rule number 4 so important? Because we are not those guys who finish this accumulation phase. You can work with kind of balance with candlestick patterns, or if you trade with Heikin Ashi, for example, then you have a kind of balance candle there. And that's so simple to see this. It's not easy. It's simple to see this strategy. It's not easy because it's up to you, because you have to make your job and you have to step on the path of logic. So how you can do this, how you can learn it, by the way, guys. So there are 2 possibilities. I created a brand new trading course. We will release this trading course. Here you can get on this masterclass. And this is just a waiting list. You can type in your name and we will release this trading course. It's part 14 parts in around 2 weeks. And it's based on pure logic. And it can give you a kind of guarantee. If you follow every single step, then you have a guarantee to make money in the market. If you follow every single step, then I stand with my own name and I give you the guarantee that you can make money. If not, then I give you a free personal private coaching, 1 hour with me to show you how. But this is the waiting list. You can type in your name, or you can visit TradeOutLoud.com. This is a free access daily trading room where you can see how I trade, just in a little bit obvious way. But this is the trading course masterclass based on pure logic, the brand new and worldwide first trading course based pure on logic. So, and this is what you can have. Normally, it's around about $1,400, 12-hour package. If you book maybe as private coaching for 12 hours, then it costs $1,400. And so just for this one, for this wonderful event here, I can offer you this for $799, or you can pay in 3 rates. And there is the waiting list. There is the, I guess it's fine, David, if I can copy this in the chat box, for example, then everybody can see it. So, for example, here we go. And then you can have in the chat now this list if you want. And if it's will be released in 2 weeks roundabout, when my team is ready with this, then you can have this in this for this special price. Ladies and gentlemen, that was my part in this webinar. I want to say thank you for listening. The German guy here, live from Bangkok in the middle of the night. Now it's 4 o'clock in the morning. I'm full of energy right now because I'm so happy that I could be a part of this awesome event here from Anchor and from David. Thanks a lot that I can tell you my position, and I can take your hands a little bit, put you on the step, on the path of logic in trading. Thanks a lot. Thanks a lot. I wish you all the best. And as always, I will finish my webinars with the words, have courage and be kind, and may the force of the rules be with you. Thanks for listening, and back to David.